The big story, we've been following the war in Iran and how it could shake the oil markets. Now, the International Energy Agency is intervening with a record release of reserves, while Iran has warned the world to be ready for oil at $200 a barrel as it threatens shipping in the Strait of Hormuz. And for more, we're joined by Sushant Gupta, Research Director, Asia Pacific Refining and Oils at Wood Mackenzie. Sushant, thanks for your time today. So the IEA releasing 400 million barrels of oil, but the Strait of Hormuz handles about 20 million barrels a day. With the strait effectively blocked, I mean, how far does this really go in stabilizing the market and bringing down prices?
Yeah, so thanks for having me here. I think, first of all, the 400 million barrels is a significant release of stocks, one of the largest in the history. And I think, but again, that's the headline number. But if you look in the details, as you rightly pointed out, so we lose around 15 million barrels per day of crude passing through the Straits of Hormuz. And if you just divide 400 by 15, that's about 26 days. So it buys you time for around 26 days at assuming the release can be at 15 million barrels per day. But in reality, the release will be much lower, because of a few constraints. Number one, it's all scattered around the world. And to reach the refineries, it will take time, and it will not be at the same rate as 15 million barrels per day, which we've lost. Logistics will be a key issue. Auctioning the crude in the market, traders buys them, ships them to the refineries. It all takes time. And the third is the crude quality, right? I mean, these tanks are storing crude, which is different, which could be different from the Middle Eastern crude, which the refineries are expected to, process. So the quality constraints can also reduce the amount of processability of this stock. Yeah. So even though it's a big number, 400 million barrels, but again, in reality, the market is still nervous about, how long this will last and how fast this can reach the market.
Yeah, so you talked about, also that this crude is scattered all over the world. Trump administration announced plans to release about 172 million barrels from their U.S. emergency reserve. And apparently that will take about 120 days to fully deliver. Surely time is not on our side. I mean, does this carry any actual physical weight to easing global Brent prices, or is this just more of a psychological signal in the grand scheme of things?
I think so any extra release in the market will help smoothen or lower the prices. But again, I think you have to look at the reality, right? I mean, U.S. SPR is already running low historically, so an additional 172 million barrels which you quoted, right? I mean, I think is still looking not something which you can reach the market immediately, and the market needs oil now for the month of April. So if you don't see that crude reaching the refineries, we expect around 20% cuts in the crude runs for global refineries, and hence that could have a huge impact on the product availability to the consumers.
Yeah, and in the meantime, Iran is warning to prepare for $200 a barrel of oil. I mean, how much of a reality could this become? And at what price level would you expect to see meaningful demand destruction in Asia?
So I think, so first of all, $200 per barrel, yes, it can't be ruled out, but the disruption and the severity has to be significant for that to happen. And the journey towards 200 will not be a straight line. It will be very volatile, as we've seen prices going up to 120, falling back to 85, and then going back to 100 again. So it will be a very volatile market to high prices. But now two things can happen. Number one, on the supply side, IEA or the US may release more stocks. Right, I mean, after this 400 million barrels. And the second thing is, demand destruction. So we're already seeing, demand being, reduced in many markets. Jet fuel prices, for example, are almost more than double. So people will start cutting down on the discretionary travel or discretionary, use of energy. And hence that will start impacting the prices. So I think beyond 100, we will start seeing the impact on the prices. And, assuming, the price reach around more than 100 for a few weeks, we can potentially see, demand side coming in and balancing the market.
Yeah, and just looking ahead, when this conflict ends, what are the implications for global oil prices when economies try to replenish this 400 million barrels of reserves? I mean, what does it mean for the depleted stockpiles in the meantime as well? And then later when they try to build out all at the same time from an energy security point of view, does this put countries, of course, in a more vulnerable position with a depleted stockpile? We know the U.S. also has not really built up right up to maximum capacity when they were actually using their stockpile for the Ukraine war.
Absolutely. I think it takes years to build these stockpiles. For example, in Asia, if you look at the OECD countries, Japan has around 450 million barrels of stocks, and it has taken years to build that up. Now, I think once they release these stocks, because this is a crisis situation, it was built for emergency purposes. So, but again, it will take the government really very cautious about how much to release, because filling that up will take time, and they typically wait for around low oil prices to fill those stocks up. And we don't, expect, prices to be, low anytime soon in the next few months. So it's a tough decision for the governments to release more stocks going forward. And it's a trade-off, right? I mean, so they need the oil as well at this time. So it'll be a tough decision for many governments.
Yeah, and Sushant, really appreciate your time and breaking this down for us. Sushant Gupta, the Research Director, Asia Pacific Refining and Oils at Wood Mackenzie.